Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Friday, the 27th of March. We return to AFC Energy, where we had the first spurt for the shares after a gap through the 50-day moving average shown here in blue at 11.78 pence. That was earlier in the month, around the 10 pence level, and the share spiked up to 30 pence. Looks like we've got a second chance for the bulls here after the retracement, which basically brought in support above the 200-day moving average of 14.88 pence. Then we've seen a V-shaped bull flag, and the view at the moment is that while there's no end-of-day close back below the 10-day moving average at 22 pence, we should see a top of October price channel target as high as 35 pence over the next 2 to 3 weeks. Next up is Greka Drilling, where been quite a few false starts in terms of the upside scenario here. Looked very encouraging back in November with the gap through the 50-day moving average. That's normally a reliable buy signal, but that faded, let us say, after a small rally there. Then another attempt by the bulls to get the shares to the upside with a gap through the 200-day moving average. That's shown here in black in December. And then now we've got a final attempt here, maybe with the gap through the 200-day moving average coming in as the week ends. And the view really is that while there's no end-of-day close back below this feature at 10.21 pence, we could finally see a journey towards the top of a rising September price channel at 18 pence over the next 2 to 4 weeks. Those who are cautious on the shares maybe wait for support to come in again towards the 200-day line area, but it does look as though with this extended RSI support line, the momentum is finally with the bulls and should stay there on a more sustained basis than in the past. Oilex is a perennial favorite here in terms of being a stock which could come up with a decent recovery. You've seen this breakdown from the autumn, obviously mirroring what we've seen with the crude oil price, but things looking rather more encouraging now and coming in the form of this gap to the upside just above the 20-day moving average. We cleared the 50-day moving average earlier in the month, found support above it at 2.17 pence, and a bounce for the RSI at the 50 level as well, which is a helpful development. Probably what one would expect now is that we'll see progress towards the 200-day moving average and the top of this rising October price channel, heading towards the 5 pence zone. Stop loss at this point really back below the 20-day average at 2.38 pence as a maximum risk really, but a reasonable risk reward trade if we can see a quick break of the 3 pence March resistance over the next session or two. Finishing off with Quindell, where we've got slow progress here over recent days with this bull flag just below the 200-day moving average at 128 pence. Hopefully that will be cleared by the end of this week, by the end of Friday's session, and we'll get a new leg to the upside towards the top of this rising November price channel as high as £1.70 over the following month or so. The cautious on the stock obviously wait for an end of week close back above this 200-day moving average 128.75. And the stop loss really on the whole buy argument at the moment probably no bigger or greater than an end of day close back below the 10-day moving average at £1.18. Obviously there are certain factors at play here on a fundamental basis, and there's a risk of a gap down or a sharp reversal, but as things stand, if this wasn't Quindell, with this sort of constructive pattern that we've seen over the last few months, one would be quite confident of a new leg to the upside of around 30 to 40 pence. That's it from me. More updates at masterinvestor.co.uk.